California just saw the largest year-over-year decline since December of 2007 with regards to existing home sales, with the year-to-date dropping nearly 19% and year-over-year down nearly 37%. Existing home sales totaled 275,000 homes through October. This is on an annualized basis. So that's saying if we kept up at the current pace that we're at right now, we'd sell roughly 275,000 homes in the year of 2022. At this time last year, we were sitting just over 434,000 homes on an annualized basis. So at the end of the day, you can see that the number of homes selling has slowed down dramatically. And most of it has to do with affordability. Because of rising interest rates, it's put a strain on a lot of potential home buyers out there, making payments completely unaffordable. Even at a time when homes are sitting on the market longer, even at a time when sellers are starting to reduce their asking price. Here in the state of California, we're seeing current price reductions on properties sitting just over 36% of the homes that are currently listed. So even with sellers reducing their prices, interest rates rising has made things completely unaffordable. And unfortunately, that's not likely to change anytime soon. In today's video, I want to talk about what's actually happening in the California housing market with regards to days on market, with regards to median home price. More specifically, we'll talk about what I'm actually seeing out there with buyers writing offers, with sellers, the kind of negotiations that are happening, what they're seeing, if they're panicking or not. And then more specifically, we'll talk about Orange County and even San Diego County to give you a better idea of what's happening in those areas if you're a buyer and or a seller in this market. The median home price was down 2.5% month over month from September, coming in at just over $801,000, but we're still up year over year. So year over year, you're still seeing appreciation in homes, but you're seeing homes fall back off the peak pricing that we saw back in May. And much of this has to do with the rise in interest rates that we discussed earlier. At the same time, we've seen the median days on market go up to 23 days from 11 days this time last year. Now, while it says 23 days, I have a hard time as an agent actually believing that number because of what I'm seeing here locally. I'm seeing homes sit on the market quite a bit longer. So when they say the median number is 23 days, I just feel like that number is low based on the slowdown that we're seeing in the market. Nevertheless, what you're seeing is homes sit on the market longer just because there's less buyer demand in the market. On top of that, you have a lot of sellers out there that truly believe their homes are worth more than they're currently listed at. A lot of it has to do with the advice they're getting from friends, from neighbors, even seeing homes sell 6-8 months ago thinking my home is better than that home. And just like buying a home is an emotional process, selling a home is an emotional process as well. And you often hear me say house prices are sticky to the upside. Why are they sticky to the upside? Because homeowners don't want to sell their homes for less than they think they're worth. Like I mentioned a moment ago, if the neighbor down the house sold their house for say $1 million and I believe my house is nicer, I believe my home is in a better location, even if they're model match properties, I've seen that property sold for $1 million. I think my home's nicer. Therefore, I'm not going to sell my home for less than $1 million because I know what my neighbor got and my house is nicer than that. And that's part of the reason that you see some of these homes sit on the market longer than they probably should, just because some sellers are stubborn. Some sellers have a number that they're not willing to go below. And what that does in a market that's moving sideways and going down is it actually causes inventory to rise, because these sellers, while they might be real sellers, they're sticky on the price that they want and they're not getting it, so their home is just sitting on the market. So in turn, they're not really sellers, and what's happening is inventory is starting to build because there's less demand out there in the market and because there's less motivated sellers because they're not getting the price that they want. And many of these sellers have locked in a super low interest rate, therefore making it more expensive to make that move, because the next house is probably going to cost more than the house that they currently own. Interest rate's definitely going to be higher than the interest rate they currently have. And so while these sellers might want to make a transition, might want to make a move, they're not doing it unless they get the price that they want. And therefore, inventory is continuing to build. And with that said, we've seen the unsold inventory index here in the state of California tick up to 3.3 months. So we currently have 3.3 months of inventory statewide. Now, realtors often say it's still a seller's market until you build inventory over 6 months, or until homes are selling on average more than 120 days. Neither of those, which we have at the moment. So technically it's a seller's market, but the reality is it's more of a buyer's market than it's been in the last 10 years because of home affordability, because of interest rates, because homes are sitting on the market longer. Now is probably the best time as a buyer, as far as competition goes, to be able to get into a property if you can actually afford it and find a home that you like. With that said, we were sitting at 1.8 months of inventory last year. So we've almost doubled with regards to inventory. And while we're still under that 6-month threshold, with it being a buyer versus seller's market, again, it's more of a buyer's market right now, partly due to seasonality, right? It's that time of year when less transactions are taking place, and mostly due to just a drop in buyer demand because of interest rates. So if you're a buyer out there, just understand it's the best opportunity, like I mentioned a moment ago, for you to get a deal, for you to get a home for less than the current value, less than the asking price in many cases, to get seller credits, to get a seller willing to work with you. And that's why you're seeing the sales to list price ratio fall to 97.3% versus 101.5% a year ago. So a year ago, homes were selling over the asking price by 1.5%. This year, this time, homes are selling for about 2.5% less than the current listed price. Now, with that said, a lot of people out there are saying, well, what happens as more inventory comes to the market? I don't think you're likely to see more inventory come to the market, at least for the next 3 to 4 months, just because of the time of year. With the holidays fastly approaching, interest rates still, significantly higher than where they've been over the last 10, 15 years. There's just a slowdown in the market in general. And a lot of sellers, like we mentioned earlier, have locked in a super low interest rate. And, if a seller came to me today and said they wanted to list their house, I would tell them to wait probably until February or March of next year, unless they absolutely need to do something. Now, if they need to do something, that home is going to come on the market, but this isn't the best time of year to start throwing inventory on the market just because of everything going on top of the seasonality. There's just less people in the market in general, and you're just going to see a slowdown, a natural slowdown, which means less inventory is going to come to the market. And so over the next couple of months, you're not likely to see inventory rise. You're likely to continue seeing it decline, at least through the end of the year. At the end of the year, we're likely to see the lowest levels, that we've seen in the last 6 months. They're probably not going to be as low as where we started the year. Here in Orange County, we were sitting under 1,000 homes, which is completely insane. But because inventory is going to continue to dwindle, interest rates aren't likely to move very far. You're just going to see home sales continue to decline. You're going to see the market continue to move sideways, prices likely sideways down in some markets, especially when sellers have to sell, need to sell for some specific reason. If they don't need to sell, prices could actually remain firm on those properties. But the reality is a slowdown in the market is going to bring lower prices. But at the same time, I don't expect home prices to crash. I've mentioned that several times. We're coming off 2 years of 20+% appreciation year over year. And, you need to let some steam out in order for the market to continue to do its thing. And so what we're seeing right now is the steam come out of the market. And we're seeing that with less property selling, with interest rates higher, less demand in the market, all of the things that we've talked about. Now, earlier in the video, I mentioned telling you a couple of stories. I have one about a buyer and one about a seller. The first one I'll start with is the seller story. So had a seller call me wanting to sell a property here locally. It was a small condo, 1 bedroom with a loft. And we priced it at $425,000. Now, it was maybe priced a little bit high just based on the condition of the property, but great location, great community, but it needed a little bit of love. And again, a little bit overpriced, but nothing crazy in the current environment. In fact, this was the lowest priced home in all of Huntington Beach as a 1 bedroom, 1 bath property that wasn't on a land lease or in a senior community. So with that said, I felt like we were kind of priced right. We were on the market for a couple of days. Seller started calling me already, was starting to panic because we weren't getting any activity. I tried to tell him, hey, listen, it's a slower time of the year for one. On top of that, we got rising interest rates. And on top of that, you just have less people looking for a 1 bedroom property. All of these things we discussed prior to listing the property, but reminding him of those things just to help calm some nerves. And, we agreed to continue doing our thing. And so week and a half goes by, we're having similar conversations. And then finally, after about 2 weeks on the market, we received an offer. Offer comes in at $395,000. Now that's 7% below our asking price of $425,000. So I call the agent and I have a quick conversation and say, hey, listen, appreciate the offer. Don't think my client's going to accept this price. We're likely going to counter a little bit higher. We do have activity on the property. People are showing it. And there were people showing it. And in fact, there was another party interested, but they hadn't written an offer. And I just conveyed this to the agent. And he said, okay, send me back a counter. I call my client back and I say, hey, listen, this is the offer we have. It was a cash offer, 14-day close, strong offer, right? Cash, quick close, all of the good stuff. He says, I'll take it. In 2 seconds, I'll take it. And I said, slow down. I think after my conversation with the agent, I think we can counter higher. Buyer's probably expecting a counter. No buyers come in, with their best offer initially. Most buyers are expecting some sort of counter. And at the end of the day, if they don't agree to our counter, they can always come counter back to their original price. And so I talked him into countering back. And what we were going to do is we were going to counter back at $415,000. So that's $20,000 higher than the offer that came in, $15,000 than the asking price. And he agreed to that. And I said, listen, that's why you hired me. You hired me to get the most amount of money for you. Otherwise, you could have just done this yourself. You could have hired any agent. You want an agent that's going to negotiate for you? That's why you hired me. Let me do my job and let me help you get you more money. I said, at the end of the day, do you want to leave money on the table? No, I don't. Well, I go back to my office, I type up the counter, I send it over to him, and within about 5 minutes of him receiving that counter offer, he calls me back and says, you know what, I've changed my mind, I just want to accept that offer. And I was like, you realize you're leaving money on the table, anywhere from $5,000 to $15,000, maybe even $20,000 if they accept our counter offer. It's the same day, we're sending a counter offer back. They'll likely respond the same day. We haven't wasted any time, lost any time here. Most buyers are willing to negotiate. And at the end of the day, he wouldn't budge. He was stuck on accepting that offer. So he ended up accepting it again for $30,000 less. That's 7% less than the asking price because he was panicked. He was worried about the market. Even though I was trying to give him some confidence in what was going on, what was going to happen, that was a seller that truly wanted to sell that property for one reason or another. I never truly knew why he wanted to panic sell it, but he was panicking. And so if you're a buyer out there, if you can find properties like that, there's a really good opportunity there. In fact, I believe if somebody would have came in and offered $375,000, there's a chance he might have just accepted it, just based on the conversation I was having. Now, at the same time, currently working with buyers in this market. And the buyers that I'm working with at the moment are putting 30 to 35% down on properties anywhere between $950,000 and $1,150,000. And the reality is, for one, there's not really a lot out there in our market that meets what they're looking for to start. And every time we go see one of these properties, there ends up being multiple offers on these properties. We've made a couple of offers that haven't gone anywhere, and we've been at the asking price, above the asking price, and we keep getting outbid over and over again. And these buyers are looking at me going,
Jeb, I thought you said the market was slowing. I thought you said homes were sitting longer.
And I'm trying to convey to them, it is, but the difference is the properties that you're looking at are super nice. They're upgraded. They're almost model homes in many ways, and those homes are still selling quickly. They're still fetching a premium on these properties. The homes like the one I was selling needed some work, needed a little bit of love, less people looking at it on top of the other things that I mentioned, whereas the nice homes, there's still quite a bit of buyer demand for those properties. So you're fighting those buyers in order to get your offer accepted. So depending on which side of the coin you're on with regards to the type of property you want, I can tell you if you're looking for a deal, you need to go to the properties that are inferior, if you will. The properties that aren't as nice. Maybe the location isn't as good. Things that I don't think you should necessarily sacrifice on with regards to location, but those are the ones seeing the biggest discounts in this market. Whereas the homes that have everything and the best locations, the best school districts that have all the upgrades, those are the ones that are still selling quickly and for top dollar. On top of that, the homes that are priced correctly from the start are also the ones that are selling quickly and usually selling for close to the asking price. The ones that are listed high for one reason or another are the ones usually seeing the biggest price reductions, and also the ones that tend to sit on the market. As you can see from this chart right here, in Orange County, 57% of the homes on the market didn't reduce their asking price at all. And those homes ended up selling for 99% of the list value, and they ended up selling in just 9 days. That shows you the homes that were priced correctly, sold near the asking price, just even a little bit below, even when they were priced right, and they sold very quickly. Whereas 17% of the homes had to reduce their price between 1% and 4%, and those homes ended up selling about 5.5% below the asking price after staying on the market for 43 days on average. And lastly, the homes that were really overpriced, the ones that had to reduce more than 5%, those homes ended up selling for around 86.7% of the original asking price, so about 14% below where they were originally listed, again after being on the market for nearly 58 days. Also here in Orange County, we finally seen the listing inventory start to drop again after moving sideways for the last couple of months. Back in September, it looked like we were going to see inventory continue to decline throughout the end of the year, and then it kind of moved sideways for a couple of months just because interest rates continued to climb, buyer demand dropped off, so you had less homes falling off the market going into escrow because buyer demand was less, and so we saw a sideways movement in those properties. And we finally started to see that inventory go down, less people coming to the market now, less people listing their homes because of the things that we talked about earlier. Current inventory here in Orange County is currently sitting at 3,515 homes. That's double of where we were sitting last year this time. That's 1,793 homes, but well below the 3-year average between 2017 and 2019, when we would have on average 5,822 homes during this time of year. That's actually 64% more homes than we currently have on the market today. So while the market is slowing, there's less buyer demand out there. It's more normalizing than anything else. It's definitely not crashing, but we are seeing the days on market rise. Here in Orange County, we're sitting at 87 days on market. San Diego sitting around 83 days on market. So as a buyer out there, when you're looking at homes and you see something that's been on the market for, 30, 60 days, that's not unnormal in this market because of the time of the year, because of the slowdown. It's normal to see homes sitting on the market longer. Doesn't mean there's something wrong with it. Doesn't necessarily mean it's overpriced. It just means you're more in a slowing market. So as a buyer right now, I would just be patient. There's no pressure to go out there and buy a house. If you find the right house, you find a house that you absolutely love, you can afford the payment, you have money in the bank, you have a longer term time horizon, go for it. The reason I say there's no pressure, there's never any pressure to buy a home. But over the last couple of years, what we saw was, people putting offers in on property above the asking price, and it would sell way above and waive contingencies and all of this. And then the next home was listed above that price and so on and so forth. So there was actually a little bit of pressure to get into a property if you were looking to buy, a year and a half ago, because you knew if you didn't buy that house, the next house was going to cost you more money, so on and so forth. We don't have that going on now. We kind of have the opposite. It's just a slowing. There's not really, the next home isn't necessarily selling for less than the last one listed, but at the same time, you're not seeing it sell for more than the asking price. And if I were a seller out there at the moment, I'd probably also be patient. There's not really a lot of pressure at the moment to sell a home, in the next couple of months, unless you absolutely have to do it for some life reason because something going on in your life. I would probably wait a couple of months, for the market to normalize a little bit, see what happens with interest rates, see what happens with buyer demand. Does that mean prices might go down? Maybe, but I don't think listing your home during this time of the year is actually going to net you any more money because of everything going on with the economy, with rates, and seasonality on top of that. And the last thing I want to say for buyers, use this time in the market. If you're planning on buying a home, but just now's not the right time, use this time to work on a budget, to work on your down payment, to work on your credit, to put yourself in the best position possible. In fact, if you want to know more about how to do that and buy in 2023, do me a favor and check out this video here.